Welcome back to the channel. Craig here from Swanson Reserve Capital. Wanted to talk about the most conservative structured product investment we make inside of our Class A portfolio, and that is principal protected structured notes. Now, they're not always going to be following indices. In this case, this one is. So this is the example, and I'm going to walk you through it. A lot of people are going to say, 22% return over 33 months. That's not that much. Listen, guys, the S&P has annualized average return of approximately 8% over the life of its inception. So if you're telling me that there's a vehicle and you have a lot of money already, why wouldn't you consider having something that is 100% backed by Citibank, meaning Citibank needs to go out of business for you to lose money, and then you could still take advantage of what these indices are doing. So let's dive into it real quick. We usually keep a 10% allocation that is subject to our discretion inside of our fund and how we want to keep our allocations. But in general, 10% into principal protected notes such as this, 30% minimum into income notes that are generating income every single month. So you're getting paid into our net asset value of our fund on a monthly basis. And those we don't buy unless they're at least hitting 15% annual returns. We're actually seeking much higher at this time. And then also our growth note portfolio, we're looking at 17 to upwards of 30, sometimes 40% on growth notes that hopefully will get called within a year. So look at other videos to get more around growth and income notes, because I have a lot of examples and our hit rate is extremely high. That's a key difference in investing in structured notes. But back to principal protected. This is probably the most boring, non-sexy, but guess what? Sometimes boring is good. This is a structured note following the Dow Jones Industrial Average backed by Citibank. The max return, meaning this is capped, as you can see, is 22%. So this is 2.75 years, this 33 months, and ultimately the max that you can make on this is 8% a year. It gives you the opportunity almost, and I'm not going to say risk-free, but on the risk of Citibank going out of business and not being able to fulfill their terms on this particular note and product, you can make up to 8% per year. And obviously the Dow Jones has absolutely gone ahead and done that. And since it did, I want to make a quick call out that we actually did sell this note prior to maturity. And since it was going up so much, we saw other favorable opportunities to get other principal protected notes that yielded a bit higher. And so we did so. That is not something we typically do unless we see an opportunity again in the fund to make that determination and execute. Hopefully this is helpful. Again, you're taking on virtually the risk of two things: of Citigroup going out of business, not being able to fulfill you on this return, this stock performing. It could really go, index can go from 43,000, it can go to 10,000. It could get crushed, but you will not be losing any money because there is full protection on this note. And the reason why I get this question, why aren't you just going to buy something for a short term, like 6 months or 33 months? The yields tend to go down the shorter that you're looking at that. And also there's a famous saying, time in the market, not timing the market. So as we're in, we could have missed over these 3 years. Obviously this started trading in 2023. We're now almost at the end of 2024. I'm shooting this as of 11/9/2024. There are dips and waves within the market. So clearly this was trending as it could have been a pretty down year, but then all of a sudden we started to pick up steam and we flew up. So you never know. Some years you're able to get the performance of an index of equities. If it occurs, you're able to capture that upside. You're able to protect 100% of your downside. So we find that that's a very attractive way to invest in the still, I would say, private markets, because we do this with, the largest investment banks in the world. This is not something that you as a retail individual can go and try to find, on your local broker or platform. Generally, they will not work with you. You have to have a network of relationships we've curated over years to be able to get access to these types of products. So I hope this is helpful. Again, principal protected notes, ways to take involvement or participate in the market upside, but also protect yourself at 100% of your principal invested. So if you want to book a call with us, we have principal protected notes, we have income notes, growth notes, and then also a long equity portfolio that I won't get into today, but it has been performing well and net positive for the year. I'm very excited to see that going forward, and we'd be happy to get you started on a journey with us. The difference investing in Swanson Reserve Capital is we do not have a 1-800 number. We're going to send you to, you get full access to myself, my team, where we expertly craft and put together structured products to hopefully shield our clients' portfolio, but also accumulate wealth into the generations to come. Thank you for your time. Thank you for your attention, and appreciate you watching the video.